All right, now we have sound. Sorry about that. We got sound. What I was saying is today I wanted to go over a trade on the NASDAQ. I wanted to tell you how I knew that we were going to hit the 15.2 level. And I want to point out that I was late today to the market, so I had no choice but to just take the low-hanging fruit, meaning I scalped the NASDAQ today after a big impulsive move. And this is something I wanted to talk about because I think a lot of people do this. They think they're going to get to the chart sometime. They get to the chart and then they end up what? Missing the trade because they feel like, oh, I can't buy in a premium or I can't sell on a discount. And like, listen, when the market's going somewhere and you know that it's going there algorithmically, it's the algorithm is designed to manipulate, right? And seek liquidity objectives. So when you know the drawn liquidity, you have to think, well, where's the liquidity that's been taken and where's the liquidity that's left? Align that with time and price with the current intraday narrative, and you will see that you can always take a trade. So before we get started, I want you all to know that this is, you know, an opportunity for me to share with my students in the Good Eats FX private analysis channel. Uh, some of the things that we've been talking about. I'm doing it live on YouTube so that people can see the value I've been providing in the group. If this is something you're interested in learning more about trading, but you're not quite ready for mentorship, I offer a $25 a month subscription where you can basically just get access to all of my packets. I have over 600 pages of PDF packets and videos that I've recorded that you get access to when you pay for the monthly subscription. It's 25 bucks. So live trading twice a week and other cool things. So anyways, let's get started. Here we have a 4-hour breaker. Okay, this last down candle running this low and then getting above this high was a huge push up in the market. So once we got to these highs here, we started to see a corrective movement here. Back down, they consolidated, right? And they were failing to trade higher. Do you see this level right here? I'm gonna outline it for you. This level, that was the last displacement on the upside before we actually fell off the market. So this is a balanced price range. You can see price as delivered through, it's redelivered into it, and it's displaced away from it. So this is a strong key level, okay? Balanced price ranges are just different fair value gaps. You can get into fair value gap theory. Come join the community. I'll talk to you all about it. I got packets on it. Just know that these fair value gaps, once they're used, they don't just go away. They stay into effect for up to 60 days. So just remember that. Now, I had an analysis that we already had hit this level, which is a redelivered rebalance zone. And for now, it's just a fair value gap theory type of thing. Consider this to be like a gap in price from this candle's close to this candle's open. These two candles were very inefficient. So what ends up happening is after they ran this liquidity here, right? Using the arrow. Once they ran this liquidity here, they decided to accumulate in this fair value gap and then run up into this zone. From there on out, we closed the week here. So I knew this week that we were going to get into this zone. What I didn't know is, are they going to come up here first or are they going to come down here? So I waited for time of day. Now that you understand that information, all I need to know is what they're going to do intraday narrative from midnight. Now I'm going to go on to the 5-minute time frame. I'm going to skip all the way down to 5 because I don't need to waste my time with anything else. I just go straight to the source. You know, if I'm going to enter on the 5, then I'm going to go straight to the 5. I have my higher time frame levels marked. Okay. So here we are. This is midnight price right here. All right, so first thing I want to identify is the opening prices. Okay, I'll show you the opening prices. Boom. Okay, right here you can see we have the opening prices. These are the only things that I'm thinking about. Remember I said earlier, liquidity taken versus liquidity left? What did they do in London? They accumulated. So the only thing they did here was generate liquidity. Okay, what did they do at 7 a.m. open price? They took liquidity first to the sell side. So now we have a high, a low, right? High, lower high, low, lower high, low, lower high, lower low, right? Lower high. And then when they got here and ran that, became a lower low. So the structure now after this 7 a.m. open price displacement became bearish. Keep it simple. We're now looking for lower prices. We have a zone that they could be going for. So I decided to just focus on the fair value gap. These series of candles here are fair value gap on a 15-minute time frame. I'm just going to put both fair value gaps that were crucial to today's price action. So you can see price came up into here. Now, you notice that they came down and they pushed up. This is the Judas swing. This is the false movement before the stock market opened. And then stock market opens right here. It goes down, indecision candle. This is the retest to the fair value gap right here, right? And then they drop crazy. I'm sleeping this whole time. I did not wake up for this. I wake up and I'm like, oh wow, how can I get in this trade now? I see there's a gap here. I see they're accumulating, but I need a retest or something. I'm just gonna enter impulsively, right? I'm not gonna do that. So I decided to grade the price swing. So from this low to this high, where did it distribute from? Right here. So if I just put this right here, I can expect 3 deviations because this is where the distribution phase happens. We have a high, we have a low down here, and this is OTE, right? So this is the last area of price before it got below this low. So simply put, I can expect 3 deviations from here, maybe 4. So once this fair value gap shot down, I'm looking for entries all in here and putting my stop loss above here. So I entered this trade here, click 1-to-1, and it delivered. It doesn't look that great on the 5-minute, right? But on the 1-minute, I'll show you what the time looked like. Okay. All right. And remember, this isn't the best trade in the world, but it's a winning trade because I understood where we were going. That's what I want you to focus on. Okay. All right. So look, I entered at 10:15. I'm expecting distribution to occur between, the 10 o'clock hour to 11. So they continued to accumulate inside of the area where they were they displaced lower. So they came back into this old fair value gap and this old fair value gap and all these. You see all these fair value gaps? This is a great place for offset distribution, right? So they accumulated. I waited through all this drawdown. I don't care. I accept the trades once I enter. And then literally right before we get to 11, they close. So check this out. I said I want to see distribution between 10 and 11. That's 11. And this is 10. I got it. And I entered over here and it went all the way over here. How did I know that it wasn't going to take me out? I didn't. I just had to believe and submit to the algorithm that they're not going to go higher before they go lower. And right at 11 o'clock, they delivered and I got my trade. Okay. It's that simple in terms of the setup for today. After that, you'll see that on the 5-minute, there was a change in the state of delivery. Now, once I got my trade, I was done. I don't play around. Once I make my money, I leave. But I'll show you this. So this was a change of state of delivery here. 11:45, going to the lunch hour, which I'm not really interested in trading that. Change state of delivery right here. Followed by a displacement here. All right, they displaced here. They generated equal highs here. And then they offered an entry there where you could have put your stop loss at the low, and you can target what? The old low that was ran, body close. But that's a lunch session move going into the PM. It was just like the trade in the morning, like this is like an edgy corrective movement back up, right? Bouncing from the 4-hour support zone. Whereas this had the speed. So train your eyes to find the moves with the speed rather than the moves that are going to be, making you second guess your bias. But that's all I wanted to talk about today. I don't want to go any deeper than that. The most important thing is to understand when the market shifts from selling to buying, when they displace and then they retest. This is A, this is B, and this is a C entry right here. So just, keep it simple. And if you found value in this video,